Good morning. I'm Dr. A. Saranya, Assistant Professor, Department of Commerce IT. Today we are going to see under the Indian economy a new topic, understanding agricultural refinance. Okay. Agricultural refinance is a vital financial strategy for all the farmers who are doing agriculture, allowing them to secure new loans by leveraging the existing assets or the obligations as collateral. This method not only enhances cash flow but also aids in managing the debts and facilities investments in agricultural productivity. By improving the financial stability by providing all these type of loans like agricultural refinance, farmers can better position themselves for future growth and sustainability for the economy. Importance of agricultural refinance. It enhances the cash flow, which will refinance. The refinancing allows the farmers to access immediate cash so that they can do the agricultural process without stopping it for any reasons like financial reasons. And also there will be a management of debt that takes place when the refinance is provided, consolidating the higher interest debts into a single loan. If suppose they are having multiple loans, they can collate everything and the higher interest debts could be converted into a single loan with a marginal, regional and reasonable rate of interest. And investments in growth, access to additional funds through this refinance will give them a better equipment which enhances the business of the person who is doing agriculture. The types of agricultural refinance, it could be divided into three types: traditional bank loans, government programs, and through cooperative loans. Traditional bank loans includes the standard loans from banks requiring some collateral to be submitted by the farmer with a specific repayment terms. When coming to the government programs, refinancing programs for farmers with the lowest interest rates and relaxed criteria will help the farmers to get the refinance through the government programs like Pradhan Mantri agricultural schemes, etc. Cooperative loans, loans that's provided by the agricultural cooperatives pooling resources for the entire terms. The entire terms could be rechanged or refinanced through the cooperative bank loans. Okay. What is the process of agricultural refinance? First, the assessment of current debt. The refinance could not be provided at a stretch when it is asked. There should be an assessment taken place to verify the current debt that is holded by the farmer. The farmer should access their current existing debts, interest rates, and repayment schedules. Based on this, they can get the refinance, which will help them to convert it into a single loan and pay at the end. When exploring for the lenders, refinance should not be provided or it should not be got by the agricultural doing persons by just like that. They should explore the lenders where they should research, they should make some research that where the terms of contract are less, where the interest rates are less should be validated by the person who is getting the loan and applying for refinance. First, you have to assess his current debt. Next, he has to make various resources and various lenders where, and then they have to compare the terms and interest rates. And at last, they have to apply for the refinance through the application process, which includes financial statements, the business plans to be collated with it. There are few challenges in agricultural refinance. One is market volatility, credit worthiness, and complex regulations. Market, if we may think that if, this crop may grow, will be in the same demand for the next year also, but because of the market volatility, it may do not have any demands on that part. So the market volatility to be studied in prior conditions. Then the credit worthiness of the person. The person who is getting the credit should always check with the credit scores that whether he could be able to repay the refinance or not. And the regulations that is complicated today for the persons who are doing agricultural, those regulatory land and agricultural loans should be kept under a view, that is navigated. Benefits. Let us say few benefits, like the refinance could be got in a very low interest rate. Suppose if you are getting a loan for 5%, and then for the next refinance it would be reduced to 4%. Lowest interest rates and flexible payment terms. After completing the first loan, you can start paying the second refinanced loan. Like that, you can make the flexible payment plans, and at last, it increases the financial security where the process of agriculture will not stop at any point. There are future trends that is found in the agricultural refinance. There could be fintech integration, like technological integration, and if it is maintained in a proper way, it could have some sustainable practices, and it is completely based on the data driven decisions, that is the analytics that is made by the financial institutions. There are some case studies I have located here. You can discuss like examples of successful refinancing, the lessons that is learned from the pitfalls, and the impact of lowest or local economies that is facing these kind of issues could be taken as case studies. And at last, the role of agricultural refinance enhances the financial health and operational efficiency for farmers. Thank you.